Hi, this is Lauren with Verivest, and today we are speaking with Jason Riley from Fairway Asset Management. Welcome. We're really excited to chat with you.
Hello. Nice to meet you.
Yeah, perfect. So I'd love to just kind of get started and hear a little bit of how you ended up where you are today and just a little bit of your origin story.
Sure. Well, it's a little bit complex. This is actually career number 2 for me. I started out life as a Navy pilot, and I did that on active duty for about 9 years, and then continue to do it today as a reservist, which I've done for about 11 years. During that time, I had a lot of fun, did a lot of hard work, but ultimately decided, I wanted to go try the civilian world, and took a lot of the tools and skill set I brought with me to that, and ended up working at a investment advisory firm, kind of as the 40-year-old intern. Fortunately, that parlayed into a job as an analyst, and later on as a portfolio manager, and then continue to grow the business until we eventually were able to take it independent, where we're at today. So it's a little bit of a, I feel like sometimes I've got my feet in two worlds, but I try and keep the same values in both.
Right, absolutely. And kind of tell us a little bit about your current role or current company that you have.
Sure. So, at Fairway, what we really focus on doing is generating income from the alternative investment market. So really what we're trying to do is we're trying to help people get that income that they need, that traditional fixed income really hasn't been able to fulfill for the last decade almost. And we're trying to do that in the private marketplace because, one of the things people really hate right now is just all the volatility in the publicly traded bond and equity markets, especially for folks who are at or near retirement age. They've lived through a 2008, they've lived through, the wild market volatility of last year of COVID, and they're really just looking for, hey, I need a stable source of income, and I just don't want to see these wild swings anymore. So that's what we focus on. We're pretty open-minded on what we'll invest in. And it's taken us to a lot of interesting places, but overall we've been able to achieve that goal of getting that consistent income distribution.
Right, absolutely. What would you say, how do you source deal flow? What is your acquisition strategy that you use?
That's an interesting question because it really takes an open mind to find the deals and transactions that we focus on. There's really kind of 3 legs to the stool I like to think about for deals that we look for. The first is really private credit sort of deals, which are bank-like sort of transactions, but outside of the old traditional banks who really largely retreated from these spaces, post 2008. The second is really an income-producing asset, so hard assets that are on the ground somewhere that generate, kind of an ongoing revenue, either monthly or quarterly, some sort of lease stream, some sort of income stream. And then the third area we focus on are what I like to call esoteric assets, which really are transactions that, no bank could really ever get their hands around because they're just a little too stodgy and not flexible. And those are things like life settlements or litigation finance, things that have a cash component to them. But are just they live in their own universe. As to how we source those deals, it really is keeping an open mind, and I like to say it's a lot of turning over rocks because again, it's the private marketplace, so these things aren't publicly advertised. You can't just generally go to a website somewhere and find them, or you can't open a Bloomberg terminal or a Wall Street Journal and find them. We do a lot on the conference circuit. There's a number of capital intro conferences that we spend a lot of time at, and spend a lot of time meeting the managers in these spaces. Spend a lot of time doing the research and due diligence with them. We've had a lot of ideas brought to us just through the organic network we've built out over the last decade. A lot of very friendly referrals that are brought to us, and then we've even had ideas come to us just from our own investors. Folks who say, "Hey, I know a guy, and he knows a guy. Will you take a look at it?" That's what we spend 90% of our time here at Fairway doing, is looking out there and finding the best deals that generate that consistent income without being publicly traded, without having that volatility.
Right. Yeah. And kind of with those deals, what key markets do you operate in, and why do you select those markets?
We really are open-minded.
Yeah.
When I say that, though, there's kind of key things we look for. The first is obviously cash. We need that cash
Mhm.
income because that's what our end users, our clients, our investors need, right? They need us as that yield replacement in their life. So the first and very foremost is it's got to have cash that spools off of it on a periodic basis. Doesn't necessarily need to be monthly or quarterly, but it needs to have some sort of predictability to it. The second thing we really look for is it's got to have asset protection. Again, like most of our clients have lived through the '08 sort of swing. They saw the losses back when they were working, and they're in their 40s and 50s. And they really don't have the room in their life to do that again. And I agree. I don't want to go through that again either. So, we really focus on investments that can protect against substantial downside loss. Can really buffet against that. I'll say that's meant that a lot of the things we've done have been in the Western law countries. Most of it's in the United States. We've invested in
Right.
things in Canada, a little bit of Western Europe, a little bit of Australia, New Zealand. But I'd say about 90% of the opportunities are in the U.S. for us.
Yeah. And is there a specific region in the US that you really try to focus in, or are you really open to anywhere in the United States?
I'm pretty open to anywhere. There's a few areas we try and avoid a little bit. Some of the usual suspects like the Northeast when it comes to real estate type of deals. They can tend to be a little bit onerous. We try and avoid some of the states that'll try and reach out and touch you with tax issues, like New
Yeah.
Jersey. So some of the
Right.
usual suspects that
Yeah.
but we're pretty open-minded. And I think for what we do for finding and hunting those sources of yield, you have to be open-minded.
Right. Right. Absolutely. What do you say is your investment philosophy? How do you determine whether a deal is worth doing or not?
Sure. Well, I like to say anything we invest in, it should be easy to understand. It shouldn't be some weird derivative strategy. It shouldn't be some complex arcane thing. I like to say everything we invest in, I should be able to explain it to my mother, right? It should be straightforward, right? To that end, kind of as I mentioned, first things first, it has to generate a cash yield. It has to generate that cash flow of some sort, right? The second thing is it has to have the ability to protect against a big downside loss. If it's on the lending side, for instance, we want to make sure that we're well over collateralized so that if a loan goes into default, we're able to go in, snag that collateral, and make good on the loan and the interest and everything, right? Um,
Right.
Other areas like in the life settlement space, which are life insurance policies, we get comfort by the fact that those things, by law are asset backed and, have to pay out. There's no risk of a default on those policies. Those things are backed in by years and years of regulation. So, so those are kind of the key components we look at, and moving beyond that, we don't want any, as I mentioned, we don't want any public market exposure. So I'm not out there. There's plenty of places you can go if you want stock advice or bond advice.
Hmm.
That's not what we're interested in. That's not what our clients are interested in. So I
Right.
really make sure that it's not going to be something that's volatile and it's going to cause wild swings, month to month on our client statement.
Yeah, yeah. And you've mentioned that, your projects really have to give that cash flow return. So how do you generate value and kind of guarantee that return once you've made the investment? What's your risk mitigation strategy that you put forward?
Well, I mean, and as every compliance officer will tell you, there's, every investment involves risk. I'm sure our old compliance officer is out there happy, his ears are tingling that I said that. Um, but really, what we focus on is we do a lot of the due diligence and research up front, right? We focus on looking at every deal, every investment, every asset, every management team, backwards, forwards, up and down, left, right, and sideways, right? Again, that's all we do here at Fairway. That's what our focus is.
Right.
We look for, I like to say, we look for a lot of red flags, right? We look for things that tip us off and say, hey, there's something about this model that we don't think is repeatable and scalable. There's something in here, maybe with the team that, that gives us some caution or some pause, right? So we do a lot of that work up front. And then, after we decide to go forward with the deal, typically we're fairly cautious in how much we allocate to it. We like to leg into new assets, new management teams, new investments over time. So we'll grow positions steadily over time as our comfort level increases, right? And then, of course, we're always doing a level of ongoing due diligence as well, which include things like site visits, which include things like management team meetings, which include things reviewing financials, et cetera. So it's a very intensive process up front, and then it's an ongoing kind of steady process afterwards.
Right. That's great. And lastly, I'd love to hear kind of who your key players are that are involved that allow you to execute your acquisition asset management strategy.
Sure. So, well, it's a little bit of a Riley family industry over here, as you'll see from our website. I serve as the managing partner, and I spend a lot of my time doing a lot of the research and due diligence. So I'm the one out there turning over the rocks and hunting for the investments and really scrubbing them back and forward. My brother Jeff is the operations partner. He spends a lot of time on the back end of the firm and making sure that all the widgets work, making sure that that client communications are met, and really making sure that the whole organization operates. And then we've got a lot of we've also got a lot of great help with a lot of service providers that we've brought on board that do a lot of the other functions that in times past you needed a ton of bodies in house for. We use Blue River for our compliance, Spicer Jeffries for all of our audit needs, and then of course Verivest, as you well know, for our administrator needs. And you guys have been a great partner as well.
Yeah, absolutely. Well, that's great. Jason, thank you so much for telling us more about Fairway today. It was really great speaking with you and really diving deep. So we appreciate it, and we look forward to working together.
All right. Thank you so much.
Yeah, absolutely.